How did a young man who was loved by the majority, seen as a genius and trusted by all, have his net worth peak at $26.5 billion, become founder and CEO of the world's third largest crypto exchange that was valued at $32 billion in the catastrophic collapse of FTX? But how exactly did Sam do this? Did he do this alone? Who even is Sam? Find out right now as I uncover the truth behind the disastrous fall of FTX and its disgraceful founder, Sam Bankman-Fried. Samuel Benjamin Bankman-Fried was born March 6, 1992 in Stanford, Santa Clara County, California. Sam was welcomed into this world through his mother, Barbara Fried, and father, Joseph Bankman. Barbara is a now retired law professor who taught at Stanford University. Barbara was also the co-founder of the Democratic Super Political Action Committee named Mind the Gap. Mind the Gap is an independent committee that raised amounts as high as $6 million, in which was donated to Democratic candidates to win elections. Joseph Bankman is a current law professor at Stanford University and a clinical psychologist. Sam also grew up with one sibling named Gabriel Bankman-Fried. The two brothers loved playing games together. Chess, Mancala, and computer games consumed much of their time as kids. As Sam began to grow older, though, Sam dreamed of becoming the world's first trillionaire to spread his wealth and make life easier for all. Seeing families suffering in poverty lit a fire inside Sam to bring change all over the world. Life kept moving on, and in 2010, Sam graduated from Crystal Springs Upland High School. Sam was known to be a nerdy kid who excelled at math in his graduating class. One memory that stood out for Sam in high school is his senior prank. It's reported that Sam printed his face on fake $100 bills and called them Bankmans, perhaps foreshadowing how he destroys many lives that will be shown in his video. In 2014, Sam graduated from Massachusetts Institute of Technology, MIT, in which he received a degree in physics. After graduating from MIT, Sam flipped to the next chapter in his life and went on to work for Jane Street Capital in the late months of 2014. Jane Street Capital is a trading firm located in New York City that traded international ETFs. Jane Street Capital is mostly unknown and even dubbed as a firm that no one's heard of. While working at Jane Street Capital, however, Sam was hit with an eye-opening experience when he saw the opportunity to potentially make his trillion-dollar dream come true by trading cryptocurrency. He found a way that he can buy Bitcoin at a cheap price in North America and sell it for a higher price in Japan. So in late 2017, Sam founded his first company, which was a crypto hedge fund named Alameda Research. Alameda Research was headquartered in Hong Kong, China. Sam founded this company and had a few friends that he met at MIT College and a few that were working at Jane Street Capital come along as well. One individual that stood out from this group was Caroline Ellison. Caroline and Sam were reportedly dating on and off, but needing all the help he could get, Sam still offered her a job. This group of co-workers built close relationships with one another. They did this by partying together, living together, and being in polygamous relationships with each other. At Alameda Research, Sam was having early success with trading Bitcoin. Sam reportedly transferred amounts of at least $25 million worth of Bitcoin in yen per day. Caroline Ellison played a major role alongside Sam at Alameda Research. Even though she initially only accepted the offer because she didn't know what she wanted to do with her career, her life would never be the same after this. She would soon be just one step closer to becoming CEO of a multi-billion-dollar trading crypto hedge fund. This decision seemed to be a blessing, but indeed will prove to be foolish and will be one of the major factors of the total destruction of everything that Sam has built. Alameda Research began trading on the market and was making a lot of money due to having daily trading volumes of $5 billion. This was huge for a crypto hedge fund. With the transaction fees that Alameda Research charges within the trades, the hedge fund was able to make $3 to $4 million each day in profit. With Alameda Research doing great, Sam set his eyes on starting a new company in the cryptocurrency field. His next big thing. Sam founded FTX, which stands for Futures Exchange, in May of 2019 with co-founder Gary Wang. FTX is a cryptocurrency exchange that appeals to customers due to the difference from their competitors by offering options, margin trading, crypto tokens, and the ability to buy and sell NFTs. As FTX began to gain traction, Sam appointed Caroline Ellison and Sam Trabucco to co-CEO positions in October of 2021. He did this so he could focus on FTX. The two served as CEOs together with some help from Sam when decisions needed to be made on big trades or money decisions. That is until Sam Trabucco later stepped down as co-CEO in August of 2022. Sam Trabucco announced on Twitter that his reason for leaving was simply due to him having to prioritize other things. Alameda Research was now with one sole CEO in Caroline Ellison. Sam, who is CEO of FTX, began to make billions due to the rise of crypto all over the world. Bitcoin went on a massive bull run, which ultimately brought other cryptos up in price with it. profit. With crypto becoming more and more popular, many customers and investors flocked to FTX. Sam saw this opportunity and sought after capital. Sam raised billions of dollars from investors like Sequoia Capital, BlackRock, and SoftBank. Sam's humble personality gained so much trust that he received $210 million from Sequoia Capital while playing League of Legends on the business call. Sam was receiving love and support from all angles of his life. He did this through the positive publicity he received, outpouring support from celebrities, and his humble personality. His humble personality drove everyone to just adoring him and making him seem trustworthy. In addition, Sam was openly declaring to be a member of the altruism movement. Altruism is a practice of being selfless or lowering one's standards of oneself for the benefit of, in return, helping a large number of people worldwide. This good representation eventually led to commercials starring Stephen Curry, Naomi Osaka, and even Tom Brady. FTX even got themselves on America's most watched sports event, the 2022 Super Bowl, starring Larry David. Partnerships included the FTX and NBA basketball team Golden State Warriors and arena naming rights where the Miami Heat play basketball. Through Sam's love of playing League of Legends, he was able to land a sponsorship deal with Riot Games. The sponsorship was 7 years and worth $96 million. With his net worth now in the billions while under the age of 30, the world then nicknamed Sam the King of Crypto. With Sam living a dream life and certainly on his way to becoming the world's first trillionaire, Sam began to make others feel uneasy. He stepped into politics. This is never easy to please both sides. Sam donated about $80 million in total to Democratic candidates. This made him the second top donor in the nation. These donations included $5 million to Joe Biden in 2020, $40 million to various Democratic candidates in the 2022 midterms, and $27 million to the Democratic super PAC Protect Our Future, which aims to prevent another pandemic. Sam reportedly said he donated tens of millions of dollars to Republican candidates as well, but will not disclose that information, nor is the donations traceable due to the fear of receiving public backlash. When Sam made this statement, he began to face political pressure as some considered he was buying political influence and security. Sam, whose net worth is at around $22.5 billion, is on top of the world, but that soon was about to change. FTX in 2022 peaked at being the third largest cryptocurrency exchange in the world by volume. FTX was behind Coinbase Exchange and Binance. At FTX, Sam invented a token named FTT. FTT was used as a cryptocurrency derivative for traders. The downside with FTT is that there wasn't a value to the token. It simply just isn't real and was given fake value by Sam. In early 2022, inflation began to take a toll in America as many corporations filed for bankruptcy. Voyager Digital, a crypto exchange, was one of them. Seeing this as an opportunity to bring Alameda Research more into the light, Sam illegally sends over $10 billion in customer funds from FTX to Alameda Research to keep Alameda Research from failing and to try and acquire Voyager Digital. This was a clear violation and totally wrongdoing. Anyone who is running a hedge fund or a crypto exchange should know doing this only leads to serious consequences. Sam did this by taking funds from customers that had deposited money with FTX and sending it over to Alameda Research in forms of FTT tokens and even shares of Robinhood that Sam owned. Sam was doing this behind the scenes without his customers' consent. Sam tried to cover this up by going to Twitter to announce that FTX was rotating a few FTX wallets. This definitely didn't leave a good taste in investors' mouths because this wasn't something normal. This was an extremely large transfer of FTT tokens being transferred, and investors and financial analysts around the world knew it. Standing from the shadows was the main competitor of FTX, Binance, whose CEO is Changpeng Zhao. Zhao saw this and knew that something wasn't right with FTX. Zhao witnessed the destruction of Terra Luna, and he believed that the same thing might be happening again. The same time that Zhao began to have these thoughts, a report from CoinDesk showed that Alameda Research had major troubles in their balance sheet. Also, the reports mentioned how the majority of the assets weren't in dollars, but instead FTX's FTT tokens. After seeing this report, Zhao, who already owns a 20% stake in FTX, which was $2 billion in FTT tokens, took a savage move to hit FTX where it hurts. Zhao took to Twitter and announced that he is liquidating his stake in FTX, citing the concerns of FTX's financial stability and condition. This move sent investors into a frenzy. Many people started talking on social media about the concerns and sparked some outrage. Sam attempts to silence the critics by going to Twitter and saying that Zhao is just trying to knock off FTX FTX with false rumors and that both FTX and its assets are fine. This didn't work, as customers weren't buying Sam's lies. FTX saw the first wave of customers withdraw. The withdrawals amounted to about $6 billion. In addition to the withdrawals, FTX stock token, FTT, crashed over 80% over the next 3 days. Sam was in desperation mode now. He knew FTX and Alameda Research were on the brink of collapse and being exposed. He didn't have the funds to pay the withdrawals nor bail himself out of debt due to FTT not being real and using up his customers' funds. Zhao, seeing that he has Sam on the ropes, attacks more and more on Twitter, saying that Sam stole its users' money and that FTX was not a healthy business. Sam sensed his defeat and swallowed his pride and went to someone to bail him out. This person was none other than Changpeng Zhao, the man who'd been calling Sam out on his lies in their Twitter war. Sam did a complete turnaround with his actions by one day saying Zhao was lying, to the next day turning to Zhao for help. Sam sent Zhao an offer to acquire FTX. Zhao accepted, and Binance started the process of acquisition. Seeing this as a checkmate, Zhao told the world that Binance was acquiring FTX. He stated that FTX was in trouble, so they saved them. However, a few days later, Zhao once again sent the world distraught as he announced that Binance will back out of the FTX deal. Zhao stated that the reason for the decision to not acquire FTX is that the condition is beyond the ability to be helped with. FTX was way worse than Binance thought, but proved that Zhao was correct all along. Sam didn't give up and tried one last move, which was reaching out to other investors like Sequoia Capital, TBG Inc., the Saudi Wealth Fund, and Apollo Global Management, but they all declined. This whole situation sent FTX in $9 billion in debt. Sam resigned as CEO days later and announced that FTX and Alameda Research will file for Chapter 11 bankruptcy on November 11, 2022. Just a day before the announcement, it was reported again that FTX had $9 billion in liabilities and only $900 million in assets. Sam sent his deepest apologies on Twitter, but the world was in outrage. They've been dealing with a fraudster and been fed his lies for years. Sam Bankman-Fried was arrested a month later on December 12, 2022 in Nassau, Bahamas at the request of the United States government. Sam was then extradited to the United States, where he was charged with 12 criminal charges. These charges included conspiracy to defraud investors, wire fraud, money laundering, campaign finance violations, making unlawful political contributions, and commodities fraud. The collapse of FTX caused a little over 1 million customers to have total losses and extreme debts. The destruction of FTX and Alameda Research was like none other and couldn't have happened at a worse time, as the economy was getting worse and worse. It triggered a downward trend in all of crypto. For example, Bitcoin fell to a price of $17,000 after being at an all-time high of $67,000 earlier that year. After Sam was extradited back to the United States, he posted bail, which was set at $250 million. This is the largest bail amount in American history, even surpassing Bernie Madoff's bail, who was also a convicted fraudster, which was set at $10 million. Sam is currently on house arrest at his parents' home in Palo Alto, California, until his trial, which is in October of 2023. However, after recent court documents have been unsealed, a report by the New York Times says Sam might have his freedom taken or may see tighter bail restrictions due to the threats of tampering and how Sam was able to post bail. It's reported that Sam's $250 million bail payment has ties to a former dean at Stanford University named Larry Kramer and a former research scientist who also worked at Stanford University named Andreas Pipke. In addition to Larry and Andreas giving amounts of money to pay Sam's bail, Sam's parents also paid a portion of the bail as well. Given that there are no setbacks, if Sam Bankman-Fried attends his trial in October of 2023 and he is found guilty, Sam will receive a prison sentence of at least 100 years behind bars. Sam put a lot of people all over the world and all of his business partners through financial hardship. Sequoia Capital has said that they have completely written off the $210 million investment to FTX. A pension company in Toronto, Canada, named Ontario Teachers Plan, has also written off their $95 million investment to FTX. The loss investment won't have a huge impact on the pension company, as the company has assets around $250 billion, but they are still devastated by the result of FTX. BlockFi has filed for Chapter 11 bankruptcy due to FTX, but has recently filed a motion to cancel the bankruptcy case for Sam's Robinhood shell company. FTX lost its sponsorship with Riot Games, the creator of the game that Sam loved to play, League of Legends. The deal was worth $96 million. After the news broke of FTX's FTX's collapse, Riot Games submitted a motion to terminate its deal to protect Riot Games from reputational harm. The Golden State Warriors have also cancelled their partnership with FTX since the collapse, but they are being sued themselves by a customer who claims that Golden State promoted the fraudulent cryptocurrency exchange. The FTX collapse also hurt others who weren't involved with FTX. The top 5 cryptocurrencies lost $150 billion over the next 3 days after FTX and Alameda Research filed for bankruptcy. As far as the rest of Sam's friend group that he started Alameda Research and FTX with, they are no longer in contact, and some are facing criminal charges themselves. Caroline Ellison, who was CEO of Alameda Research, pleaded guilty to multiple charges that included wire fraud, conspiracy to commit commodities fraud, conspiracy to commit securities fraud, and conspiracy to commit money laundering. In addition, a third individual under Sam at FTX named Gary Wang pleaded guilty to charges of conspiracy to commit wire fraud, conspiracy to commit commodities fraud, and conspiracy to commit securities fraud. Caroline and Gary are both fully cooperating with prosecutors to lower jail time. The FTX and Alameda Research collapse was due to dishonesty and mishandling of large sums of money by a group of young adults who acted like kids. Honestly, Sam and his co-workers shouldn't have been put in the positions that they were in due to the high amounts of money they were handling with absolutely no guidance nor expertise at all. Welp, you have now reached the end of the video and know the disgraceful truth behind Sam Bankman-Fried and the disastrous fall of FTX. Thank you for your time, and I'll see you soon.